What's up, boys? I'm going over today's trade recap today. How I made $269 today. Boom. There's the P&L. I took two trades today. One W, one loss. The loss was like $140, so it was less than 1% of risk. I believe you guys could see me, right? Yeah. Okay. All right, we all good. All right. So going in today, right? I do have to confess, I did purchase an account to full port for CPI, and it failed. Um, because like, what in the shiza is this move? Like what? What is this? What is this candle here? What is this candle? Like normally CPI is supposed to go one direction, but I guess not. I mean, that's how it's been for honestly all of these CPIs. I think the last time that it kind of worked was literally the other CPI. I remember I tried to full port that, but I only got like $600 out of it. So it was like, yeah, it was still profit, but nothing to pass an account. So it is what it is, but I wasn't gonna let that discourage me. So going into open, I have conditions set out. Um, Obviously we tapped in, respected this 1 hour. However, we do have an unfilled 1 hour bearish gap, so um, I'm leaning towards sell side. I'm leaning towards shorts. I'm eyeing shorts because if we could get a tap into here and maybe a sweep of this London high, I think we're going to reverse target, the low, the 4 hour low, and the CPI low, because this was the CPI low, and you could target New York AM low. These New York AM lows, you could target the unfilled 4 hour gap or 1 hour gap because there is a huge imbalance. And since CPI is the inflation data rate, if the inflation is going to be, more than expected, right? If inflation rises, that only means that asset classes are going to decrease. Okay, so because that happened, right? CPI missed. It was higher than expected. Inflation was higher. It was 3.8, I believe. Okay, now we're looking towards, shorts, right? So now that we got that out of the way, um, so the first move, right? Really beautiful. It literally did exactly as I said, right? We tap into this 1 hour, we sweep this liquidity, we create a high time frame bearish SMT. See how ES doesn't take these highs, right? That's an SMT. SMT here. Sorry, my computer's really slow. 1 hour SMT. Okay, boom. Now what are we looking for? This is a trade idea that I was literally thinking about taking, and I'm frustrated at myself that I didn't take it because it literally tapped high time frame condition, liquidity sweep, SMT, and then later I'll show the inversion. So boom, fat inverse. Huge 2 minute inverse. I was eyeing down this 2 minute inverse. Um, and so we get that 2 minute inverse. I know that eventually it would definitely retrace and respect a bullish gap, probably on like the 3 minute or so. So like yeah, right here, it would respect the 3 minute. And so I literally had my limit right here. Because if you go to here in this range, right, perfectly aligned with the OTE. So that's one thing. Because I was literally telling myself, like, yo, like the market makers, they don't want to complete this move of sweeping New York AM low and then also sweeping the CPI low. Because here was the CPI low. And so I'm like, dude, I'm eyeing shorts, bro. Like I would have placed my thing right here because it was at the CE above this 1 hour gap, targeted CPI low, boom, 5 to 3. Cheeky little 130 point move. But I hesitated. I was a pussy. And honestly, if you had the same thing where like you hesitated as well, don't be discouraged. Don't be, don't care what like other people do in trading. Don't care whether if they won or lost. Just learn, from people that you admire, people that you want to trade like, and just learn from them, learn from their mistakes, because this is something that every trader experiences. Me, myself personally, as I'm telling you right now, like everything lined up, everything that I wanted to see predicted all lined up. And yet I didn't take the chance. I didn't take, the action to press the button. And so that's something that I got to live by, but that's something that I got to learn from. And because ultimately, like, there's nothing like you should really be afraid about. The only thing that I was afraid about was like this 1 minute inversion right here. And like maybe if we really wanted to reverse and sweep this high again, which is definitely possible, like I've seen it happen before, but like had I just risked it, um, I would have only lost like 100 something dollars, which is less than 1% risk, but then I would have been winning so much money, right? Um, so yeah, just something to learn from me. So yeah, okay, so now I marked out my new range, right? Because we tapped into OTE right here. I'm anchoring my fib tool right here at this swing high and the swing low down here. And so I marked out a this 10-minute gap. It gets disrespected. And so this was my first trade idea was okay, we tapped into OTE. We had a nice rejection in this 10-minute gap right here. Nice rejection. It rejects a little bit lower. And so I enter off of this inverse. It's not like the best inversion, but it is an inversion. Um, but in hindsight, there's no really like clear break even point. So this would be a clear break even point if we were to enter shorts again, right? And so because I get stopped out, my analysis is still there. My bias is still there. My draws on liquidity are still there. I'm just like, oh, maybe the market makers just wanted to reach into 0.79, right? An ultra discount. And so boom, I see that. And now this is a way better inversion that I like to see. Now I know that this swing high is protected. And now I know I could just easily target these lows. You could have even targeted these lows, right? And even targeted in the gap, right? Because if you're just looking on the higher time frame, if you just zoom out to this 15-minute, clearly price just had an order block, 15-minute order block, 1 hour. Clearly are sweeping high, and then we're eventually going to drop down. Um, and yeah, okay. So now, boom, my analysis is still there. My bias is still there. I'm not changing my bias just because I got stopped out. Now we're in. Boom, get tapped in. Right here is our break even point. That's another good indicator when you enter trades is that you have a clear break even point. Um, and if not, if you enter in off of the trade like um, it could create its own it could create its own break even point in the trade as well. That's the thing that I learned as well. But boom, right there, flush, go break even, doesn't even come close, just straight flush. And so that was the move all along. Because I missed this move, right? This nice 140 point move, right? Would have been beautiful. 160 points around there. Boom, could have done a ping pong back to back trade, just instantly flush. Because it was a beautiful day for shorts, honestly. Like if you were eyeing shorts, um, and right, we're not looking for longs because the CPI data miss, right? That's news, right? You always want to trade with the trend of the news. And that's why look right here. We're almost negative 2% in the NASDAQ. Huge correction, but it's needed, honestly. It's needed. What comes up must come down, right? Look at this huge imbalance, bro. There's just a huge imbalance in price. Like, stuff just eventually needs to get filled. And it only is a matter of time before news takes its part, you know? But yeah, hopefully you guys learn from this. Hopefully you guys see how it's just completely flushing to this take profit zone at the low. Insane. Because we are in a sell model, accumulate, manipulate, and go lower. And that rally up for the continuation, that was a nice little AMD a little bit. Because we do have like, after we sweep that liquidity, we are kind of chopping around for a little bit. We manipulate a little bit higher, sweeping out this low or this high that maybe has some sell orders. Sweep out those orders, enter premium or discount, and then just go low. So yeah, really beautiful trade. And if you took this trade as well, or maybe if you missed it like me, don't beat yourself over the head. It's fine, right? Even the best traders in the world miss out on trades and are also scared as well. So it is what it is. Um, so yeah, that's the trade recap. Hopefully you guys learned. Hopefully you guys learned from my mistakes, learned from my failures, learned from my uh, lack of confidence in the first trade, and then hopefully you guys learned from the second trade and learn that you shouldn't be scared whether you get stopped out or not, you know? Because like if your draws on liquidity are correct, if your higher time frame is correct, right? That's why like a lot of people, and that's me personally, how I got trapped into this IFEG trap. because the IFVG is just it's an execution model on the lower time frame to then target higher time frame draws. And so if the higher time frame is drawing towards the lower liquidity and lower imbalances, then you just need to find that lower time frame execution, right? And you just got to be patient because it will present itself eventually. And if it doesn't, then it is what it is. You don't trade, right? So yeah, hopefully you guys learned. Hopefully you guys won or lost. If you lost today, it is what it is. If you guys took longs today, I would really just say like either don't flip your bias because you probably maybe flipped your bias, or long until you're wrong or whatever because we're in all-time highs, even though that we're not. That only would make sense if CPI hit its analyst point or was better than expected. But because it was worse, right? We're almost at 4% inflation. That's just you shouldn't be longing, right? You should be looking for shorts because the news was bad. So hopefully that makes sense. Love y'all. God bless.